All eyes have been on the Fed in July, and I'm sure everybody knows that the Fed chose to keep rates steady. But there's already a sense of divergence at the Fed. So while a majority of members voted to keep interest rates steady, 2 members voted against this decision and chose to cut interest rates. This could actually be the signal that cycle is turning. Now, we need to look at data to see why there's been divergence at the Fed. The first thing that you'll notice is that the labor market data looks promising. But what is worrisome is not the unemployment rate at 4.1%, but actually the fact that consumer spending is coming down. The next thing that we want to look at is where inflation is, and inflation has been between 2.5% to 2.7%, a little bit away from the Fed's 2% goal, but heading there. The more interesting thing that could come our way is, of course, the Fed's deliberation on its long-term goals. So by the end of the summer, we're going to have some insights as to what's going on. The last thing we're going to look at is growth, which has been quite uneven, and a lot of this is due to the tariff policy. So while your H1 growth this year has been at 1.2%, last year we were at 2.5%. So there is a slowdown that's coming in. There's a lot of debate as to what the Fed needs to do to address this. And we polled our audience this week asking them where interest rates would go, and 60% of you said that they'd be at the same level. We also asked what you think the biggest risk is, and about 40% of you voted that a recession was the biggest risk. So stay tuned to our channel.